right, so now we get to the DXY, which is the US Strength Index, and it's going to be very, very important in our trading. It's going to allow us to understand better the storyline, see what's going on, and make our trading way, way, way more precise and more efficient. Okay, so let's go through the different characteristics of this instrument. So number one, the DXY is the relative strength of the US dollar. Okay, so basically this index will be calculated using the value of the different currencies, commodities, indices, and so on and so forth. Okay, and it's going to give us the strength of the USD, an overall average of the strength of the USD on that particular day, in the last few weeks, few months, and so on and so forth. So for example, if we see that a DXY is bullish, the value of DXY is going up, it means that the market is currently buying the US dollar. The US dollar is strong. If we see a DXY that is going down, it means the USD is getting sold. Okay, overall in the market. Okay, so it gives us that insight, and it gives us an average on every single instrument, what is the current strength, relative strength of that US dollar. Okay, and that's going to be very important when we will trade commodities and indices to compare and see, to build a storyline. Okay, so we'll get to that point a bit later on. So next we have the correlation with commodities. Okay, so gold, silver, platinum, whatever, and stock indices, Dow Jones, S&P, Nasdaq, and so on and so forth. So correlation, what do I mean by that? It's going to be inversely correlated. Okay, so it's going to be inverse. So it's going to be inverse correlation with the commodities and the indices. Okay, let's see indices here. So basically, if gold is going up, okay, if silver is going up, usually USD should go down. Okay, USD will be sold to buy commodities, and USD will be sold usually to buy indices. All right, so it's usually always the inverse. The problems sometimes is if you see, for example, gold going up, okay, and then you see USD going up as well, or you see Dow Jones going up and you see USD going up, so DXY going up as well. Okay, so if you see those types of patterns, it means something is going on. There's manipulation. Okay, there's going to be market manipulation. We will get there shortly. Okay, but it's very important to always look at the DXY and see, do we have like a natural inverse correlation? So natural inverse correlation, which is the default setting how the market should operate without any manipulation, or do we have an unnatural correlation, which means USD DXY is following commodities, following indices. That means that something is wrong. There's some type of manipulation. There's some sort of hidden agenda, and you should look into it. Okay. The DXY is going to be for observation only, no trading. Okay, you can trade it if you want, but it's not the best instrument to trade. Me personally, I just prefer to observe it and use it as another element of confluence in my trading and to help me build my trades. Okay, so my recommendation would be just to observe it and not trade it. Okay, it's also a timing indicator. Okay, so basically when you're trading the New York session, which is going to be the session that the USD is the most active, that commodities are going to be the most active, stocks and indices are going to be the most active as well. By looking at the DXY, you're going to look at the price action and see is the market currently buying or selling USD, and is it doing it now, and is my timing correct? So for example, if I'm looking to do a long on gold, okay, so let's say I want to long gold this morning. Okay, let's say it's 9 a.m. currently, and I see the price having a consolidation on gold. Okay, so let's say we have a consolidation, but when I look at my DXY, okay, I see that the market is pushing down. Okay, so let's say we're just bearish. We're bearish, but aggressively. So gold is in a consolidation, but DXY is starting to push, bearish at 9 a.m. Okay, well, this is going to give me an indication, a timing indication that, okay, USD is being sold off. Okay, so USD is being, there's a sell off on USD. And it's only a question of time before that hits the gold market as well. Okay, so that gives me an indication, a timing indication that the movement is coming along very soon. And if I have my good price, my technical price, then I can look to execute my entry. Okay, so it could be used that way as well. It has a tendency to move slightly out of technical areas, so it tends to leak if you're looking at fib levels or psychological level, or even moving averages. DXY is not the most precise instrument, so if you have a large support here, that could be used as a level, for example, for USD strength, and you're expecting DXY to bounce on it. Most of the time, it's going to reach the level, consolidate, might leak a little bit, come back up, and do the movement afterwards. Okay, so the levels are not going to be respected perfectly. Okay, but it's to be expected with the DXY. So that's why we don't want to trade it, and we just want to observe it, because it's not really reactive like commodities or indices can be. Okay. And lastly, the last point, which is the most important one, market manipulation indicator. Okay, so what do I mean by market manipulation? Just like I said before, usually the DXY is going to be an inverse correlation with commodities and indices. Okay, if the DXY is following the moves of the commodities and the indices, it means a hidden agenda is going on, a manipulation is going on. Okay, so let's say I'm looking, it's 9 a.m., it's New York session, I'm looking at Dow Jones, US 30, okay, and it's moving up, it's pushing 100, 200, 300 points, okay? Then I go to look at my DXY, see what's going on, and I see that it's pushing as well. It's pushing strongly. So basically USD overall in the market is being bought right now. But we just said that it's supposed to be the inverse. If the stock market is being bought, if indices are supposed to be bought, usually there's going to be a sell-off of the USD, and they're going to put that money into, let's say, for example, in this case, US 30, and that's going to feed the movement to the upside if we're looking to a bullish movement. Okay, so here there's a problem. Here there's a market manipulation. Here there's a hidden agenda. Okay, it means that one of these two movements, either the US 30 or the DXY, is not natural. It's a manipulation, and it's only a question of time before it reverses. Okay, so then it gives you like a red flag, and you must inquire further on what's going on. So if I see DXY going up and I see US 30 going up, I'm gonna ask myself, okay, which one of these two is currently the false movement, the red flag, the manipulation. Okay, most of the time the DXY is going to give you the true story. Okay, I would say 90% of the time DXY is going to be, okay, the real movement. It's going to be the real market intention. So if I see DXY going up and pushing up and US 30 going up, most of the time, in case, unless there's some fundamental event that's going on, if there's nothing going on fundamentally, usually the US 30 movement, the other movement could be gold as well, is going to be the manipulation. Which means that, for example, we're buying USD, DXY is going up. There's a 90% chance that this is the real intention of the market. So US 30 is getting manipulated. So I know that a reversal should be coming. So that already gives me an insight that I should look at the technical level. So if US30 is going up, I should look at technical levels where I could have my reversal. And that this whole movement was just, positioning, market positioning, because certain institutions wanted to reach a price to execute their idea and then eventually push the price. Okay, so that's what's great about DXY. It gives us really something to compare the price action of commodities and indices to, and look at if it fits the storyline, if it fits the narrative. If we see that everything is inversed and everything is correlated naturally, it means that the plan, basically there's no hidden agenda, there's no market manipulation. If US30 has to go up, DXY is going to be sold off. If gold is going up, DXY is going to be sold off. That's natural, that's good, no problem. If we have an idea to execute, we can execute it without a problem. However, if we see that they're going both on the same direction, it means there's a manipulation, there's a hidden agenda, something is going on. Look at your fundamental. If there's a specific fundamental situation, figure out what's going on and which one is the real movement. But most of the time, like I said, DXY is going to show us the real intention, because it's an average. Basically, just to simplify it without going too much in details, it's the average of the whole market, the whole feeling of the market, the whole USD strength of the market. So it's a better indicator of what USD is doing right now. So that means that if DXY is the real movement, the other currency, commodity, whatever it is going to be the manipulation, is going to be the fake movement, and you should expect a reversal. Okay, now it's your job then to find a good technical price, to find a reversal, and understand that it's just a question of positioning. The movement, the bullish movement we have right now is temporary, and it's going to reverse soon. Find a good technical price and maybe enter at that price if it fits with your fundamental idea, with your storyline, with what you understand is going on. Okay.